Good afternoon, everyone. Today is Thursday, May 24th, 2012. My name is Tim Haberkorn. I'm a senior market strategist from R.J. O'Brien Futures in Chicago. Today, I'm coming to you to bring you an update on the crude oil, NYMEX crude, and the Brent oil market. First thing I want to touch on is the NYMEX crude oil market and the fact of we've just coming off of a large downswing that we had about 2 weeks ago in the market. That now has brought us to more of a stabilized market. Still falling, but more stabilized than what it had been previously 2 weeks ago. The new trade, the new trend, what a lot of people are inquiring about in the crude is how to catch it, after the last move we had with the market falling. And really the trend we're going to get for probably the next few weeks is going to be more of like a staircase approach going down. We're going to continue to go lower. I would say starting after the holiday weekend here, coming into Tuesday, you're going to go back to still being in a downtrend, but it's going to be more having 2 days where we're going to see upside, complete upside for 2 days, or at least two, maybe 1, 2, 3 days out of a week, and those are the days that you want to wait for and then sell on those days. Both the NYMEX and the Brent crude. So that's a trade right there that I'm absolutely hawking, trying to get into. So again, you don't need to look for specific prices. You don't need to look for specific areas. You want to wait for the days starting next week when the market does retrace back up. Then I would say after the stock market closes, look to sell at that point. Typically, I'm riding them 24 hours, sometimes 48 hours, because the downside is more presence right now in the market. You're going to see more downside than upside. So look for that trade in both of those markets. I have a couple support and resistance numbers you might want to keep in mind as you're trading. For the NYMEX crude, the normal, regular crude oil, New York crude, the first area, of resistance on the upside is going to be that $93 level. From 93, you're going to have 95.50. From 95.50, 97.30. Really, those aren't going to come into play as much. More coming into this holiday weekend, it's a big driving season. You have you usually have a lot of people driving, buying gas and stuff. So this is a week that we have oil that typically goes up. But coming into the new week is when you want to start selling, maybe off of one of those resistance areas. Second, the support on the downside. What are the next points that we plan on trading down to? $90 is a huge barrier in the crude market. Psychologically, it's just a big area. Below that is $89.20. 86.35 is the third spot, and the lowest is 79.50. Some people may think that's crazy, but I do see the market getting down there and really coming down there actually before you know it. Again, it's going to be that staircase method trade you're going to want to look for. If you have questions on the trade or in general with the risk and how to handle it, feel free to give me a call at the trade desk. My phone number is area code 312-373-5087, and my email address is T for Tim, and then Haberkorn, Haberkorn, at rjobrien.com. Feel free to contact me if you have any questions. And again, trading commodity futures and options carries a substantial chance for loss in investing, so be cautious on when you're investing. And again, if you have any questions, let me know.